This market week has already ended one day early because the markets will be closed tomorrow for Good Friday. Next week will be the newest CPI inflation report. Of all the economical data sets reported to us each month, the inflation report usually has the most notable effect on the market, whether that's good news causing a rally or bad news causing a dip. Other than that is when the Federal Reserve decides what to do with interest rates. Aside from the PCE data recently, which was a hit and a miss, the CPI next week could give us an idea of what the Federal Reserve may do next. Now, there is only supposed to be one more month of interest rate hikes, unless they stop early or pause. Jerome Powell has actually done a good job, in my opinion, not caving to politics. He's actually simply done his job. Raised interest rates, lowered inflation. JPMorgan recently talked about the idea of pivoting, which he said he's not going to do this year, at least not if nothing changes. But pivoting is when they actually turn around and say, okay, the battle against inflation is over, let's actually lower interest rates now. JPMorgan pointed out that historically, they have to be very careful with how they time that. The pause, if it happens, stopping early, stopping on time, pivoting, all these things can cause market rallies sooner or later. But if we are actually going to recover from that point or not, depends on how properly we approach it all. So I've been buying long-term, trading short-term, and holding capital. There's reasons we could rally soon, and there's new fears that could cause crashing soon. Inflation alone could also be fought by ramping up oil production, among other things, but we'll just have to wait and find out what all the politicians decide to do and so forth.